Hi, this is Martin on a Quick Mortgage Minute. Thank you for spending a couple seconds with me here today. Please don't forget to like and share the channel. If you need anything, you can call me directly at area code 714-616-2809. So today I'm here to talk to you a little bit about the difference between a home equity line or a home equity loan, right? And it's important. Some people call me and they're like, hey, I want that HELOC, but they really want a home equity loan. So the main focus about both of these is that they're in second position. They basically do not disturb your first mortgage. So if you have a first mortgage at 2 or 3%, this is a good option as a second mortgage to take out cash, pay off debt, pay for a life event such as a wedding or whatever it might be, right? And the difference between a home equity line and a home equity loan is a home equity line is not fixed in. It's going to adjust based on the market and the volatility of interest rates. And right now we are in a little bit of a declining interest rate. So a lot of people are going for a home equity line because there is a good probability that rates might go up, down a little bit further, right? So we're really not in an inclining interest rate market right now. A home equity loan is the same thing, second position, but it's a fixed in amount. And typically the interest rates will start off sometimes 1 point higher than your home equity loan. So it's fixed in, but you pay a little bit more for that security. An example, if a home equity line is at 7%, a home equity loan might be at 8%, and it's fixed in. It's not going to be volatile on you. So that's really the big difference between a home equity line and a home equity loan. Not to mention the line, as you use those funds, many banks, you have about 3 years to use funds again as you pay down the line. Okay, so it's open for usually about 3 years. So those are some pros and cons. Some people want the security of that fixed payment. Some people want the ability of the lower rate, but they're subject to the volatility of the rate market. So if you have any questions, let me know. Here to help you. Thank you and have a great day.